check my YouTube channel real quick. Let me know if it's live, if there's any issues, if you can hear the voice and everything, please. Should be live now, but just give it a second just in case. Let me know if it's...
Yep, looks like the audio is working on YouTube.
Perfect, thank you. Okay. Awesome. Let's get started then. Let's go ahead and start with first the fundamentals, what happened overnight, and then we'll come over to the technical side. So we're about 18 minutes out from the interest rate release. So yesterday we had CPI data coming out from the UK, and it's holding at that 2.8%, which is the same as the previous. They were forecasting that there was going to be a bit of an increase against that 3% consensus. So this is pretty much a dovish surprise for Bank of England going into tomorrow when their interest rates are coming out, which means that inflation has not reaccelerated as much as they had feared initially. We have US retail sales that came out this morning, increased up compared to the previous in the forecast. We're expecting a little bit of a slowdown compared to the forecast. And then same thing with the month over month. So beat the consensus here at 0.9%, almost double, pretty close to it, of what we had for the month over month consensus here. So that is a pretty good signal when it comes to the retail side, showing that the retail control group, which is directly feeding into the PCE calculations, it's pretty up strong with that 0.9 and 0.8% increase for the core retail sales. So pretty good signal, hawkish data point, landing right on FOMC's table this morning, right before interest rates are coming out. So now when we're looking at the FOMC meeting, we're expecting, of course, that they're going to hold on to those interest rates at 3.75%. It's the dot plot that we are more interested in, and that is going to be the main play when it comes to today's move in about 15 minutes or so. But the retail sales data points, it puts the pressure off of the Fed a little bit. It shows that the consumer resilience is still there. We still have a pretty good retail side. All right, and then that's pretty much it for today that we're going to cover. Let's come over to the headlines. Pull that up as well. If there's anything else that we need to watch out for. Not much. Something else I wanted to pull up was also this statement here from Trump. Still going back to that just a little bit of that oscillation pattern that we have been seeing already. That him saying that he will use the military strikes and all that stuff again. But we are about 2 days away from the final signing ceremony. So we're going to continue just monitoring these headlines to see if the MOU has already been approved from both sides. It's just the formal ceremony that has to go through on Friday. But the main thing here, the sticky point, is Lebanon, that we have just gone over as well in the market update. But also the main thing that the market is also preparing for, the reason why we're seeing so many gap downs when it comes to oil on daily time frames and the 4-hour time frames and all of that, is the fact that we're going to get the Strait of Hormuz to reopen after the signing ceremony. So it hasn't reopened yet. And then there's also the mine clearance that's going to go on right after the signing too. Let's see if there's anything else. They also have to continue talking about the nuclear program, so they have about 60 days of continuing those talks. All right. So nothing different than what we have already seen in the weekly outlook, market update, and the couple of live sessions that we have been doing throughout the week anyways. So let's come over to the technical side. Reset the chart. Currently still sitting at all-time high levels. You've got the topic rejection, 42,300. I'm still going to map out the weekly candle open. We still have a gap here. 51,500, drop down to the daily, still pushing up quite bullish. So 3 identical daily candles that we have here forming, but let's see what ends up happening in about 13 minutes here. I'm expecting a little bit more volatility. So here, let's take a look at the 4-hour support consolidation area. If price continues breaking below that, then we have our pretty good sell opportunities coming down for about a 400-point move to the downside into 51,500 as the potential target. Consolidation that we're just sitting in, so we're not going to be looking at any sort of trades here just yet. Drop down to 30, 15, same thing. Nothing here just yet. If anything, we do have a pretty good range after price bounces off of this area here into the support. So what I want to see is price coming close to at least this area right here at the minimum, drop back down, and then either get me a candle closure or deeper retracement, basically grab liquidity, and then continue pushing back up bullish, and that is a potential buy opportunity that we can take. But remember, the key thing here is not the actual interest rate release. It is going to be the dot plot summary of what we're going to end up getting, if we're actually going to see those rate cuts or even rate hikes, or potentially if we're still, as a market, should we still be pricing in about 2 to 3 rate hikes going into the end of the year. The first consensus was, definitely we're going to get a rate hike in December. Then another one came in closer to October. And then we got another one that potentially July or even September is when we might get another one. So those are the type of clues that we're watching out for here for the most part. When it comes to the type of different scenarios, also when it comes to the dot plot, if there's a hawkish outcome, that would mean that the dot plot is going to remove any sort of 2026 cuts entirely. The market's already preparing for that they're going to remove any sort of cut language altogether. Or it shows a potential hike, and Warsh is going to lean into the strong retail sales, for example, in the press conference. Then we're going to see that the US dollar is going to break above the $100 mark. Let's bring up DXY. So it breaks above the $100 mark and it continues pushing back up bullish. Euro USD also will gain some support from that as well, for that continuation down with the US dollar gaining more strength. Same thing with GBP USD, and then US30 is also going to be impacted, but it is also going to be one of the most resilient ones, given the diversification of it with the financials, industrials, and all the different sectors, compared to NASDAQ, which right now it's leading the losses, but we're expecting that it's going to test even some of the lower levels if we do see a bit more of a hawkish outcome. If it's dovish, if we see that we're getting a dovish sentiment from the dot plot, that would mean that the dot plot is still holding onto at least one projected cut, or it just doesn't show a hike at all, even if there's no cuts. Then we're going to see that Warsh basically stays a little bit neutral, a little bit more measured. It does not lean into any sort of the data surprises. Then we're going to expect that DXY stays below the $100 mark. Euro USD continues to push back up bullish, as it's already setting up that bit of bullish momentum. Same thing with GBP USD. And then with US30, that's going to get that momentum to continue breaking above those previous highs and continue creating higher high levels. NASDAQ and S&P 500 will potentially get that bullish momentum to the upside as well. So those are two different scenarios that we want to keep in the back of our mind as we're doing the technical analysis here. So we're 10 minutes out. We're done with US30. We're going to create an alert. Let's drop down to the 15. I'm just going to wait. I'm not going to create an alert for any buys here just yet. I want to see how the candles end up closing. on the hourly time frame. But ideally, as the interest rates are released, even if it's like a massive wick rejection, something like this, I do want price to dip back down into this area if it's going to continue pushing back up bullish. Let's come over to NASDAQ now. So with NASDAQ, we have our top wick rejection. So it hasn't broken the previous highs, it's just tapped into it. 30,600. You have your this week's candle body open. 29,700. Drop down to the daily. So previous daily candle closed bearish. This new one made a little bit of a top wick. What I can do right off the bat is just create a zone right into the support. If price flips back down bearish, then we know that we're looking for sells. If price continues holding on to the support as it is on the 4-hour time frame, and then it continues pushing back up bullish, then we have our buys to the upside. Still about 400 points to the upside, or potentially 200 points to the downside and a little bit more. So within this consolidation, we're not going to be looking for a trade at all. So you see how tight this consolidation is getting. Let's go over to commodities and then we'll come back over to the currencies. Now looking at gold, same exact thing from the market update and the couple of live sessions that we have already been doing. You have the same exact support on the weekly time frame, which is that candle body open, 42.30. Actually, sorry, 4,300 is what I meant. 4,300. And down here, around 42.20 is where the last weekly candle closed. So you still have a gap right here that the market still has to come back. Right now, it seems like we're sitting in our weekly high. So we're going to drop down to the daily time frame. What I'm going to take a look at is create a zone where price is sitting at the moment, which is this previous support here to the left. And if price continues pushing back up bullish, then we will be targeting those previous resistance levels, support levels right here into 44.60. Drop down to the 4-hour time frame, so it's still maintaining that bullish momentum. Drop down to the hourly. Here, what I'm trying to do is narrow in my zone to look at what are my potential sell setups. So if price breaks back down below this and continues pushing down, then I have my sell setup coming down into almost 43.20 area and then 4,300. Anything in between, I would stay out of it as of right now. What we can do also is narrow in the zone a little bit more. Here you go. So we're about 7 minutes out from interest rate release. Come over to silver. We have our candle body open from this week. Currently sitting at the top of our range here too, but what I already see, what I can already map out from the weekly time frame would be these wick rejections. That's what I would be targeting. Drop down to the daily time frame. And then here, I see that price currently has this bit of a support area. Previous support, current resistance. And so what I want to see is if price has enough momentum to continue pushing past this level. That way we can start looking for those buying opportunities. If it doesn't, then we're just going to wait to see what ends up happening here. Any questions on these so far?
Nope. Sounds good.
Perfect. Let's come over to the 4-hour. You can narrow in your zones a bit more if you'd like, right around here. So if price breaks below that, same exact thing as gold, you look for your sells. Give me 1 second. Let's come over to oil and then we'll get over to the currencies. Give me 1 second, I have to update for this live session here. Perfect. All right, now we have our bottom wick. So we have pushed down further. Remember, from the market update, I had talked about how this is a crowded short at the moment, especially as we're getting closer to the actual interest rate release. So we still want to be a little bit more careful today, and especially going into Friday, to actually end up getting that deal signed, because once that deal is signed is when you're going to see the actual capital rotation happening in the markets. On the 4-hour time frame, already got a massive top wick rejection, but also for this pair, you're seeing a ton of consolidation right below that area. So that's your crowded short move that's happening. All right, now 4 minutes left. GBP USD. Still, we'll be treating this as a swing trade only, but as you can see from where we were a couple of weeks ago from our weekly outlooks and market updates, we've had a pretty good move just bouncing off these support resistance levels. So that's your confirmation to continue looking for that zone to zone trades. So even on the weekly time frame, if price can continue breaking below its own low right here, let's bring this down a little bit more, right around here. It can continue breaking its own lows. You still have, if you're trying to day trade this pair, about 62 pips to the downside. If I drop down to the daily time frame, I start to see consolidation here. Rejection off the zone, pull back. So if price again breaks its low, you have 60 pips that you're looking for your buy or your sells to the downside for your buys. You want price to break above that 1.346. Continue pushing back up. You have about 45 pips here. Take it up to the next resistance for about 100 pips, and then a continuation up for about 171 pips. I'm still treating this pair as purely swing trade, so I will not be day trading this at all. Come over to your USD. And then we also have our candle body open from this week. I can see a little bit of a gap here. And then when I come over to the daily time frame, this is where the market closed out on Friday. This is where it opened up on Sunday or Monday. So you have a little bit of gap here still that we still haven't filled in completely just yet. But even based off of the daily time frame, you have this little support area. So this is a much tighter range than GBP USD. You only have about 21 pips to the downside here as of right now. So just wait for price to break above that resistance or below the support, and then look for your trades here. 2 minutes out from interest rates. Let's come over to GBP JPY. Today's going to be very important for these two pairs, for GBP JPY and also USD JPY. And then I'm going to map out this previous support here, because the current weekly candle does not have any sort of direction. So if price does break below, we are going to have to reassess what's the next major support. On the daily time frame, this is my support area. So if price breaks below that, then we have pretty good sells to come back down for about 87 pips. That is only if I can see a stronger US dollar, or actually a weaker US dollar, and then get more strength for the JPY, and then a continuation down here. So those are a couple of things that we still have to watch out for. And tomorrow you have Bank of England's interest rates that are still coming out. If you are trying to scalp this pair, you're going to wait for price to completely give you a clear outside of this 4-hour consolidation. So that way you still get to scalp and day trade this pair back up for another 60 pips. All right, interest rates just have been released, or they're about to be. All right, as it's pending, let's come over to this. So this is the zone that I'm trying to watch for. I want price to break below, give me a wick rejection, flip back up, and then look for those buys there. All right, we have our economic projections, and let's also pull up the statement. Any questions on the technical side before we start pulling these up?
No.
We have a few more people who are trying to get in. Economic activity is expanding at a solid pace despite elevated uncertainty due to the conflict in the Middle East. Productivity growth and capital investment are strong. Job gains have kept pace with the workforce, but when we looked into it further, it was mainly due to the AI-related roles that were opening up. What I also want to see is any sort of security purchases and things like that. Okay, nothing immediate that stands out here just yet. All right. So it seems like for the most part, we're expecting a potential hike for sure by December, and then going into next year, expecting a little bit more rate cuts. Let's go down here. So these were the March projections. The market's pretty much going to be preparing for the December rate hike for sure. I want to see if we can get another specific one. Let the 5-minute candle close here first. We've got 40 seconds left. So nothing that really stands out too much, but they're going to continue holding out the rates. And then looking at the summary of economic projections, it's quite split, but the market is prepared for at least one rate hike for sure, but it's quite split. But going into 2027, we could see some more rate cuts happening. But as of right now, in terms of, whether you're going to get a rate cut or rate hike, they have for sure removed that type of language, but they're maintaining the stance of we're gonna see at least one rate hike going into the end of the year.
Is that why we're seeing the drop then on equities?
Yeah, we're seeing a lot of.
Yeah.
Just give it a second. My main thing is just making sure that we're not getting stuck in massive wick rejection. Yeah. But you are going to get some good moves going into the press conference. Another thing is, if you also notice, much smaller statement compared to what we're used to with Powell.
Yeah. Are we expecting like a press conference like the one Powell used to do?
He's not going to do the one with the where he's answering the press questions. That's what Warsh has said. But he is going to come out and he's going to make the statement here.
Okay.
I'm just giving it a couple of minutes to see which way that price is going to end up continue pushing. And then we'll end up looking for a trade here. I'm just looking at these minor levels here to the left as well, right?
Yep.
Let's look at NAS. Same thing here. My only thing is, you know, those massive wick rejections that we might end up getting with the big volatile movement. So we're just going to continue waiting here. Gold has dropped all the way down into 4,300. So now what we're going to do is wait for either price to continue pushing back down bearish. If that happens, it's the cleanest move that we're going to catch for an entire gap fill. Or price makes a bottom wick, flips back up in the next couple of minutes, and then pushes back up bullish. So we'll still catch that trade to the upside. So we have good setups here. Silver is pretty much on the way. Let's see if we can get a little bit more push and get a gap fill.
Yeah,
So
the
this
reprice get gap fill on NAS as well. That's why it looks like quite sharp.
I'm gonna download this for our market update later. Actually, this weekend we'll do a webinar on this very specifically. Alright, so this is what I was waiting for. That's why we're not hopping in immediately. Let's try and see if we're gonna get wick rejections, gonna pull back up. Same thing with NAS. We're just waiting on gold here. Silver also hit the alert, but then it started retracing. So that's the reason why we wait here. So overall, when we're also looking at the statement, I briefly just touched on it, but the main thing that we're looking for was them removing any sort of language when it comes to those rate cuts, which they have removed entirely. So it was underwhelming to see that we don't have any rate hike clear indications, quite divided in the sense of that, but they've removed that language whatsoever from the actual statement of any sort of rate cuts. So that doesn't imply immediately that we are going to get a rate hike or how many rate hikes we're going to end up getting. The market for now is still going to be projecting at least one rate hike going into December, just to combat the second leg of inflation effects that we're still dealing with due to the war. And the fact that once they sign this deal also does not mean that inflation is going to immediately go away. It just means that it's still going to take a while for inflation to calm down, all the effects that have been started by the war to really just play out their entire the entire sequence, the trickling effect throughout the economy. So it's still going to take another 6 months or so, which is pretty much in line with the December rate hikes that we're expecting. But it does seem like going into 2027, 2028, we might get some more rate cuts instead. So still waiting for gold here. I want the 15 close for this one particularly because now we're breaking below a very significant level. So then the next candle can give me a top wick and we fill in that gap, and that is going to be our trade for gold. Silver is moving right now. I'm still going to wait for silver. I want the bigger moves from the equities. So US30 already made a massive bottom wick. It's flipping back up. So as long as it holds onto a resistance and then drops back down, I'll take that sell. If it pushes back up bullish, then I want candle closures above this area, support and resistance formation here, and at least on the 5 minute, and then a push back up. Same thing with NAS. So you guys see the volatility that we had here, but the reason why you should be waiting out instead of just jumping in. For USD JPY, let's come back here. USD JPY is currently sitting at very strong levels. This is not a pair that I'm touching at all. Any JPY pair, only one actually that I will be trading is going to be GBP JPY. We just analyzed that, but I'm not touching this because, well, first thing is that Bank of Japan's interest rates came out earlier this week, but the market was looking towards that for any sort of signals to see if they're going to strengthen the JPY through that. But they ended up holding out the bid through their bond purchasing or their bond taper pause that happened. And then we're looking at today's interest rates that just came out. Very underwhelming. We're expecting to get some more rate hike projections. Didn't end up getting that. Still, it seems like a very divided Fed. Remove the language of any sort of rate cuts whatsoever. So just trying to see what ends up happening with the press conference. Give it a couple of minutes and then let the market price that in. Depending on that, the expectation is that we are going to end up getting some sort of move here above 160. And this has been said by Japan's finance minister during the G7 meetings as well. And it's backed by the G7 ministers globally. Anytime USD/JPY is pushing above 160 where it's sitting right now, the risk is very much live that the finance ministry is going to step in and they're going to try to strengthen the yen and pretty much manipulate the currency strength here and expect a drop. But the problem here is that they've already done that. They've already stepped into the market twice this year and they've already injected about 10 trillion yen. So now in order for this to have a much bigger impact, they're going to have to inject a lot more money, or they're going to have to manipulate the currency a lot more, which is a lot harder. So that's not really going to be supporting what they're trying to do with the yen or what they're trying to do with the economic policies here either for the yen, and it's going to make Bank of Japan's job that much harder. So you have the finance ministry and you have Bank of Japan that are trying to work with the JPY here. But a lot of this is also being impacted by the war. So that's why I'm staying away from USD/JPY. That's what I'm suggesting my students to do as well. You have a lot of other pairs that you could be trading instead into the market. But if you just want the full analysis, that's kind of the resistance areas that we're sitting in. Drop down to the daily. You still have a little bit of consolidation. If you really, really want to trade this pair, you're just trading zone to zone from that resistance rejection. So let this push up a little bit more and then come right back down. And that is going to be your trade to come back down into the support area here. You're just looking for simple intraday support resistance zone to zone trades here. I wouldn't try to swing trade this at all. All right, we're coming up to our 15-minute candle closure here soon. I just want to see the 5-minute close bearish. The next candle, give me a top wick, which is going to be the top wick on the 15, and then flip back down for any sells. For any buys, we're still waiting for price to break above this. Anyone trading silver, your move is pretty much going on right now. You have a new 15, just let it make a top wick, flip back down. That's your move to the downside. Nothing on oil. And here's a new 15 on US30 and NASDAQ. So NASDAQ pulled back into the zone entirely. So we're still going to wait here. I still want to see candle closures, bottom wicks, break and retest, push back up. go over to Bloomberg and see if we have any headline updates. Alright, so it's the AI investment boom. That's mainly pushing the productivity growth in the capital investment, and jobs are also impacted by that because majority of the jobs are opening up in the AI space. So at least 1 quarter point hike this year. 6 anticipating at least 2, another 9 expecting no move or a cut. So pretty divided overall. Alright, we gave it a little bit of time. Let's see what's happening here on the 15 now. So we push back up into that consolidation. But we're sitting right into a zone here at the moment, so there's no indication of whether we're looking for buys or sells just yet. I'm waiting for my confirmations first. Gold has also flipped above 4,300, but the interest rates that we just got, the monetary policy statement and the dot plot, it gives gold enough room to continue dropping. So we're still going to be looking for sells below 4,300. If the candles close above 4,300, then we just kind of wait it out, wait for another support formation and flip back up. The key thing here is that usually I would be looking for impulse entries based off of interest rates. And then also during the press conference, we would get a lot more volatility as Powell would be answering questions. But here we don't have that. So I'm just waiting for my actual candle closures and then looking for my entries after that. So the game plan for this time around is a little bit different than what I would usually be doing. Alright, as we're waiting for the press conference, I'll be right back. Just give me 2 minutes. All right, we got candle closure above the zone. Can we hold on to it? Any other pairs that you guys want analyzed that we may have skipped over? Everything makes sense so far?
Yeah, good for me.
Yeah, everything looks good. I'm just still looking at silver right now.
Cool, cool. We're just over a minute left. And then start pulling up the press conference.
Very strong signal from the dot plot and the SCP that higher rates might be needed, and so I would expect that we hear from a number of those committee members. But exactly because of that, I actually don't expect that Warsh gives up his opportunity to do the press conference. There's some questions or speculation that he might not do a press conference after every meeting. I think he will, because it at least gives him the first chance to frame the meeting today, gives him the first chance to frame that dot plot, which kind of clearly skews hawkish, and potentially push back on it if that's in fact what he wants.
Bob, who would you listen to on the FOMC if Fed Chair Warsh takes a back seat to communication?
I'd listen to Waller. I think Waller, to us, was somebody who is very reasonable, very rational, is very balanced, looks at the full picture. He would have made a very good Fed chair. It didn't work out that way. Look, Kevin Warsh will be fine. He's a very credible. Clearly, he didn't go in with the dovish bias that we all assumed he was sent in with. I'm dying to know how the president's going to react to this. His first meeting, everybody wants to now start hiking.
So this is the setup right here. Let's come over to 15. As soon as this candle flips, that's your setup after a massive top wick. So that's why I would be waiting for this candle to continue pushing down. That way your stop loss doesn't have to be all the way up top there. It could be somewhere here. But just be careful because now we're 4 minutes out from the actual press conference. With US30, same thing. We're holding onto a resistance. So just let it flip. The 15. Let it break its own low. And you're continuing down even from, let's say, 5190 area coming down to like 700s, you still have, you know, pretty good like 100-point move that you can still catch for that massive wick fill. But the key thing here is just letting price break its own low first. That's how you're going to be testing volume in the market. Same thing with NASDAQ. So let's just set our alerts here. That's too low, so let's bring that one up a little bit more, right around there. I'm going to bring those side by side. It hasn't started yet, but once I start, please let me know if you guys can hear it, at least on Zoom. Pull this one up to the side as well. Alright, just over a minute left. Candles are moving in our direction, which is perfect. Just waiting on gold and silver still. But NAS and US30 are in our direction.
Good day. It's an honor, a true honor, to be back at the Federal Reserve and to take up this duty at a time of such consequence. I've been especially heartened by the warm welcome of old friends and new colleagues both. And I've listened closely to my fellow FOMC members, heard a lot of new ideas, new thinking, and genuine interest in moving the Fed forward. This week's FOMC meeting exemplified the very best of the Fed's traditions: rigorous debate, open-mindedness, commitment to mission, responsibility, and accountability for performance. In this business, they all add up to one thing: getting monetary policy right, or as near to it as we can do. That is our North Star. My colleagues and I are here to serve our legislative remit, which you've heard us say before: price stability and maximum employment. And these objectives guided our business in the meeting just concluded. As you saw a few moments ago, the committee decided to maintain the target range for the Fed funds rate at 3.5 to 3.75% in support of the Fed's dual mandate. The committee also reaffirmed its policy of maintaining ample reserves in the banking system. Economic activity is expanding at a solid pace, despite elevated uncertainty that owes in part to the conflict in the Middle East. Productivity growth and capital investment both strong. Job gains have kept pace with the workforce, and the unemployment rate has changed little. We recognize that inflation has been running well ahead of the Fed's long-stated inflation goal of 2%. That's been going on for more than 5 years. Persistently high prices are a burden for the American people. But the recent past need not be prologue. I am pleased to report that members of the FOMC are unambiguous and unanimous. This committee will deliver price stability. At any institution, a change in leadership is a natural and timely opportunity to reaffirm its mission to review current practices and to consider whether those practices best meet our objectives. My Fed colleagues and I will be working in close collaboration to ask what changes might improve the conduct of monetary policy. On that score, you might have already noticed something, a difference in today's policy statement. It's a bit shorter, a bit simpler, and it dispenses with some older language. That statement just gives you the facts as best we can judge it.
Instead of jumping into anything.
Absent also is so-called forward guidance, which we agreed was not well suited to the current policy conjuncture. This afternoon, you also received the usual summary of economic projections. It's been the practice of this committee for participants to submit these projections, and I have encouraged my colleagues to continue to do so. I, however, have refrained from offering any projections of my own consistent with my long-held views on the SEP, at least as currently structured. In the median projections, real GDP rises at 2.2% this year, 2.3% next year, and total PC inflation runs at 3.6% this year, 2.3% next year. The unemployment rate stands at about 4.3%. The median participant judges that the appropriate federal funds rate to be at 3.8% at the end of this year and 3.6% at the end of next. Let me turn now to a few words on a key initiative that we're announcing today. I'm appointing a task force in each of 5 areas that are central to the broad conduct of monetary policy.
Massive topic on the 30.
First, Fed communications.
15, same thing.
Second,
We're waiting
the
for
Fed's balance sheet.
Price to continue creating top
Third,
wick and flip back down.
our
or was that
use
100
and
point move to the
reliance
downside?
on existing data sources. Fourth, productivity and jobs in
Still
an era
waiting
of
for NASDAQ.
transformation. And last, the
Gold
Fed's inflation
top wick
frameworks.
Flips, that's your sell.
These subjects are
Still
timely,
waiting for silver.
consequential, and in my view, worthy of a fresh look. My colleagues and I discussed them with energy and purpose over the last couple of days. For each of these independent task forces, I'm enlisting some of the very best minds, both inside and outside the economics profession. They will be supported by subject matter specialists from our superb Fed staff. And they'll have a straightforward charge. Start with first principles. Ask hard questions. Examine current practice. Consider alternatives. And ultimately propose next steps for policymaker consideration. Since last summer, my colleagues discussed possible improvements in the form and function of Fed communications. This new task force will build on that effort, and I expect propose some well-considered changes, including to the SEP I mentioned a few moments ago. The second task force, the one on balance sheet policy, will review the benefits and risks of the current ample reserves regime and the composition of the Fed's balance sheet. They will assess alternative frameworks for the conduct and operation of monetary policy. The third task force, the one on data, will evaluate new information sources and consider methodological changes to improve data gathering, with the aim of giving policymakers more accurate, relevant, contemporaneous, and perhaps most important, actionable information on the state of our economy. Fourth, the task force on productivity and jobs. It'll survey the pace, the reach, the economic impact of new general purpose technologies, including AI, and explore the implications for the Fed in pursuit of our employment and inflation mandates. The last task force, the one on inflation frameworks. That'll examine the drivers of inflation, first principles, and weigh the full range of ideas for delivering price stability in a changing economy. You'll hear quite a bit more about these task forces and this overall initiative in the coming weeks. Enough for now to make a simple statement. Each task force will serve an objective shared by everyone in the system, shared by everyone around that table that I sat with over the last couple of days. A Federal Reserve that is clear-eyed about its mission, fit for purpose, and focused on the future. And with that, I appreciate your attention. I'm happy to take your questions.
Howard Schneider.
Hi, Chairman Howard Schneider with Reuters. Good to see you again, and welcome back. This is a lot to be putting in motion so fast. What is the timeline you have in mind for each of these?
So I think it'll depend on the task force. It also depends on the urgency in which we need clear answers. My expectation, I'm still in the business of recruiting and finalizing them. My expectation is the task forces will begin work in the next couple of weeks, and we'll start to get some more information from them, some more framing of how they see things starting in the fall, and hopefully most, if not all of them, concluding by year end.
Everything that he has already said.
And just specifically on the inflation framework, you talk about first principles. Does this include a review
So because of that,
of the
we're going to
2%
wait for
target
candle
itself?
closures. We need
You've
price to
mentioned
get out
that
of
things to the
consolidation
right of the
zones.
decimal
Usually we'll
point
be able
don't
to catch a
matter.
very good scalp within
Should
the
this be
consolidation.
starting
We don't
from a
wanna do that.
premise that 2% as a point estimate is too strict?
Let me break that into two pieces. First, on the inflation framework review, their remit is what are the drivers of inflation? What's the Fed's responsibility for inflation? In part, how do we measure inflation? But that'll overlap with my data group. On the 2% inflation objective, that is the Federal Reserve's long-held objective of 2%. You've heard me say before, I tend to focus on the left of the decimal point. Well, the 2 is the left of the decimal point. For now, 0 is to the right. I see no reason until we have reestablished our commitment and ability to deliver on the 2% inflation objective to revisit that. So that'll be outside the scope of what we're taking on.
Colby.
Thank you so much. Colby Swift with the New York Times. You've in the past said that inflation is a choice, and in the policy statement, it includes this pledge to deliver price stability, as you've reiterated today. But looking at the SEP, the bulk of your colleagues expect core PCE to run around 3.3% by year end, and for the 2% inflation target not to be reached until 2028. So I'm curious how patient you think the Fed can afford to be at this juncture in terms of waiting for one-time inflation waves to wash through and for underlying inflation to step down after so many years of inflation running above target, and under what circumstances you would support the Fed taking some action and raising rates.
Sure. So quite a bit there. Let me try to break that into pieces. First, we have the capability and commitment to deliver on our price stability objective of 2%. That's exactly what we're going to do. In the Fed's review of its strategy over the last any number of years, in January, the Fed, including the strategy that we're still bound by, the Fed statement says that inflation is primarily determined by monetary policy. You bet it is. I've said for years inflation is a choice. You bet it is. And today I'm announcing that this committee unambiguously and unanimously have decided we are going to deliver on that. The rest of your questions sounded like a encouragement for me to give forward guidance. We've dropped forward guidance. Some along the committee, I think, dropped it, I suspect, from our discussion the last couple of days, because they said at this moment in time, it doesn't feel as though providing forward guidance is right. Others have, I'd say, different views and think as a general proposition, forward guidance isn't the business we should be in. But that'll be taken up by the Task Force on Communications and my policymaker colleagues. We're going to listen hard to what the experts say and make our own decision. But I can't give any forward guidance about what we're going to do next. The good news is we'll be meeting in 6 weeks.
So just following up, I guess, on the current policy settings, then I am curious how restrictive you think things are at the current moment, given the flow of data that we've seen and forecasts that are coming down the pipeline.
Yeah, I've heard characterizations both inside and the Fed about that. I'll give you my own. It's uneven. If I look at the housing markets as one example, Fed policy isn't the single determinant of the state of the housing market, but broadly I would say Fed policy appears to be somewhat restrictive. I would have a hard time managing to say those words if I were to see what's happening in financial markets. So I'd say it's uneven. That's perhaps a function of different transmission mechanisms of monetary policy, whether monetary policy is coming from our interest rate tool or our balance sheet tool. But the good news, we have a task force on that too, and the balance sheet task force will be looking more at that subject.
Mike McKee.
You've said you don't like forward guidance. You dropped it from the statement this time. But with the dot plot, 9 members suggested that they want a rate increase by the end of the year. And the markets have taken that as forward guidance. So what does this mean in terms of how you guide the markets and in terms of what the dot plot's future
Still
is?
waiting. Trying to get some candle
I'm going to have to give you the
closures.
same answer I gave to Ms. Smith. We've got a task force for that. I'll give you a little bit more. I reviewed the dot plots, and when I saw the submissions, I noted that all the submissions were coming in with pencils, you know, those kind with the big erasers. That's to say that I think my colleagues around the table, when they submitted their dots, understand the world is changing quite quickly. And they didn't feel bound by them 6 weeks from now or 6 days from now in the event that their circumstances change. I'll note a couple other things. What I heard around the table was, as they submitted their modal forecasts, to be clear, weren't, this was more likely than not. This was more likely than their other scenarios. So I didn't hear tons of conviction. What I heard was the kind of humility that I think we should have. I did not submit a dot. For me, it's not helpful in the conduct of policy. I suspect by year end, as I mentioned in my opening statements, there'll be a review about communications broadly, press conferences, dots, meetings and the like, transcripts, minutes. This will be part of that. I don't want to prejudge the outcomes there, but I'm pretty open-minded about what they could be. And I was just incredibly impressed over the last couple of days. My colleagues over the last 2 days, and frankly over the first 3 weeks I've been here, have been very open about changes. Change isn't easy, change is filled with risk.
All right, we got our first
But our
strong
number one goal is to
15-minute
get
candle
monetary
closure.
policy right.
After interest rate release,
The way to get
bottom
monetary
right, flip.
policy right is to
Now
deliver
we're
on the
looking
remit
at
that Congress gave
potential
us to
buy
deliver on price
opportunities.
stability.
Sells
And
are
there
still going
was
to be down here,
no
but the
disagreement
main
on
thing
any
is
of
that we're
those
trying to
points.
clear out of
At the
this.
risk of possibly getting the same answer
Same
about
thing
task
with
forces, communications.
As long as price
what
is
is
not
your
moving
feeling
consolidation,
about
we're
these
still
news
solid.
conferences? Are you going to continue one after every meeting? Do you think find them useful? What is the future for the way Kevin Warsh will communicate?
Well, this one's probably got another 15 or 20 minutes in it, so I don't want to prejudge the outcome. Press conferences can be a very useful way to communicate with households, businesses, and more broadly through using the likes of you. I had a great old mentor named George Schultz, and his mantra was press conferences are useful, but when you have one, you want to make sure you have something important to say. Today, I think we had something important to say about our commitment to deliver on price stability, our commitment to rethink practices with an eye of moving the Fed forward, and to give you and the American people a sense that these aren't idle thoughts, these are concrete thoughts, that we're going to seek out the best minds, both the best thinking inside of the Federal Reserve and the best people I know in business and economics and the academy and technology and the rest, to share their views. That's what we're going to be doing here, the pursuit of truth. I think we're going to come up with some new and interesting things. We made some changes today. I expect more changes to come. And some of those might well be worthy of a press conference.
Hi, Chris Rugaber at Associated Press. Thanks for taking our questions. Could you give us a sense of how you see inflation more in the long term? I know you may not want to comment on the ups and downs, but is this mainly driven by energy prices in the Iran war at this point, or do you have any concerns about underlying inflation pressures in the economy? Thank you.
So I can't do much better than the committee just did, so let me restate it. Inflation remains elevated relative to the committee's 2% goal, in part reflecting supply shocks that have driven price increases in certain sectors, including energy. The paragraph goes on to say, but to be clear, the Fed will deliver price stability. My own judgment is the committee spent quite a bit of time, not just in 2 days, but over iterations of a couple of weeks. That's what we're prepared to say about inflation, but the commitment to deliver is strong, unanimous, and unambiguous. And that's, I think, an important message. We've missed for 5 years, and we're going to fix that.
Well, great. And then just on the data task force and everything else, I mean, generally speaking, I think people feel the Fed looks at everything already. Certainly that was the sense from before. Is there data that you feel is not given enough weight? I mean, you mentioned the trim to mean in the past, but again, that's well known to certainly most Fed members. So what is that task force looking at, and what might be I mean, I know you don't want to prejudge the outcome, but are there examples of data that you expect might be given more weight? Thank you.
So you're answering my question. So let me say I don't want to prejudge the outcome. I also don't want to say too much about what they're going to do because I still have a phone call or two to make before I've nailed down the people that are doing that. I'm interested in what the outside experts' view is on the subject. I'll say this generally. Most of the data that central bankers and other government officials in the United States consume come with old-fashioned survey methods, a national accounts of what the U.S. economy looks like that looks very little like the U.S. economy in 2026. Survey methods that don't have response rates that we need, asking questions that might have been quite applicable a generation ago that are less applicable now. So even inside of official statistics, I would be open-minded if the task force and our own best thinking had recommendations how those official statistics can be brought up to a standard of our time using new analytic methods. I'd also say this, almost every private company CEO that's running his or her business are doing so with real-time information that isn't subject to much revision, that is telling them what just happened at that very moment. As you know, there are normal, long and variable lags in the conduct of monetary policy. What we're really interested in is what's happening right now. What we're less interested in is echoes of history. And you're hearing from my answer that some of the data that we receive, that we're waiting on, the first Friday after the month, the payroll index or something else, that might be an echo of history that's quite useful on its third revision. We need to take those error bounds down because we have to make hard decisions in real time. I'm really open-minded that there is a lot of new data sources that we can learn from the private sector, from reforms in the official sector, and new analytic techniques that are far more refined than asking a simple question about whether something was core or non-core.
They're not going to give us forward guidance, that we're just following data points basically at this point.
Lawrence with Fox Business.
Waiting for
so if you don't give a lot of ongoing forward guidance, won't the markets have more volatility, and should Americans have more access to what you're thinking going forward?
So I think financial markets perform best when they react to incoming data. I think the financial markets work less efficiently when they ask a question, how will the Federal Reserve react to that incoming information? The more that markets are paying attention to what's happening in the real economy, deciding what's good data and what's less good data, the more financial markets can price what they believe is the most likely and what are the tail risks. Financial market prices are probably the most important source of information to guide central bankers. But when all the financial markets are doing is reflecting back what we've said, then we're taking the most important source of information and we're being blind to it. I'd like us to create a system where those blinders come off, where markets are following data that they efficiently think is reliable, and they'll be watching data, we'll be watching data. They'll come with better information through market prices to us. We can make more informed decisions with ultimately the goal that I said at the outset, deliver on the price stability objective that Congress told us to do and that we've got to get in the business of doing.
Yeah, if I could take you in the meeting a little bit. This is your first meeting. The board members seem fairly hawkish when you listen to, in general, when you listen to what they're saying. Was there any discussion of a rate cut going forward today?
There was one proposal on the table. There was no discussion of any other proposals. The discussion on that proposal, I would say, was quite limited. The group was unanimous and unambiguous on it. It has been the practice of this central bank and others to have a range of alternatives. Today we had one. I thought it furthered discussion, deepened it, and made it clear what we needed to do and how we needed to deliver. I wouldn't prejudge what happens in the future, but there was only one big subject for us. We took it on. We had a good family fight on it for a couple of days, and we ended up, I think, in a better place.
Claire.
Thanks a lot, Claire Jones, Financial Times. You know, coming to this blind, reading this very nice short statement that I think we've all appreciated in the room, one might wonder why you didn't raise rates today, considering what you're saying here about the risks to US inflation and your mandate. I guess, why not, and what would you need to see in order to get to that place? And secondly, on your task forces, are there any best practices at other central banks that you'd consider looking at? Thank you.
Yeah. I'm glad they're in the practice of giving you two questions, because my answer to your first question was going to be very curt. I've got nothing more to say than the statement itself. And to the point of the question I got before, market reactions to what we say unfiltered, I think is more helpful than having delivered a statement at me than improvising further upon it. Best practices of task forces. This is a subject I've thought some about. I've been on a task force or two in my life. Best practice, find the best minds. Ensure that the task forces have a range of people, both by backgrounds and predispositions, so they too can have a bit of a family fight. Make sure when you establish a task force that the group that's going to be the recipient of the information feels as though they've got some equities in it too. That's why we're looking for, haven't done the final roll call, some of the most significant talent we have in the building and across the reserve banks on each of these, and in some sense seconding them to this group for a period of some number of months, so that the leaders of the task force know what the most analytical central bank in the world thinks about that. They can reflect on it. And a final best practice, we're not outsourcing decisions to anybody. Administrations past and present, reserve banks have chosen a group of 19 people around the table. These will be our decisions. We can agree to some of the recommendations, disagree with others, have a good family fight about it. But what comes from them will, I hope and believe, make the discussion we have internally better, stronger, more of a dialectic, so that we can finally deliver on that price stability objective.
Look at all the different
Just a quick
and
follow-up on your markets point. If you look at 2-year yields, they're really suggesting that markets think more tightening is needed. Would that be your read on what the 2-year yield is saying as well?
We were in such a good place. This is why we don't do third questions, I presume. I'm not going to offer any commentary on market reaction over the last 30 or 60 minutes. What we've given markets is a new chapter for the central bank, some fresh thinking. What we've given markets and households and businesses, I think, is a commitment to ask ourselves hard questions such that we can deliver on the promises that we've made before. This is a lot of change for financial markets to digest. I wouldn't be particularly intrigued by how they react in the first several minutes or even first several days. What I think is most important is that financial markets, and at least as important, households and businesses know that this central bank will deliver on price stability.
Hi, Chairman Warsh. Brian Chung with NBC News. Thank you for taking our questions. So when you say that we've dropped forward guidance for the layperson, that might sound like the Fed's going to say less or offer less insight into where their borrowing costs might go. So for the person that maybe you might run into at the grocery store, where the price tags are rising at a faster pace than their wages at the moment, how would you explain it to them? I don't know if task force might be the answer there, but how would you kind of communicate this era, this chapter of the Fed?
If I told somebody in the milk aisle that I had a task force for that, I think that would be doing a very poor job, so I appreciate it. If I saw somebody in the grocery store, what I would say to them is that we cannot have a very significant effect on particular prices. The price of oil in the markets today, or even the price of a dozen eggs, that does not have first order consequences to what we're doing. But we do have a really important job there. And it's to make sure that those changes in oil or beef or eggs or milk don't broaden in the economy, don't have second and third order effects. That's our job. That's our commitment. That's our capability, and we're going to deliver on it.
And then is the Fed's relationship with the Treasury also under review? There was the normal breakfast meetings with the Treasury Secretary. Is that something you intend to continue doing? And have you had conversations with the president since you're swearing in?
So on the president, I don't have anything for you. With respect to the Treasury Secretary, he has been posting pictures of our breakfast, so I don't think I can deny that. The long tradition at the central bank is that the Fed chairman and the Treasury Secretary meet weekly. I think we've pulled off 3 of those so far. I believe he's overseas this week, so this will be the exception to the rule. I think they're very useful discussions. The central bank's objectives and our roles and responsibilities are quite delineated from the fiscal authorities. And in my view, monetary policy is independent in the conduct of what we do. But that doesn't mean we're not interested in what's happening with the fiscal authorities. The way I think about it is this central bank needs to have a wide lens, but a narrow remit. We need to be quite interested in what's happening in the world. I won't be breaking any news here to suggest I'm quite interested in what's happening in the Middle East. That does have some effect on our day job. It doesn't mean it's our responsibility, but I think we're going to keep a wide lens, and my meetings with Secretary Best into this.
What's going on in the market? What's pretty much happened? Still waiting. Let's start off with the equity side. Okay. So we just went over the interest rates and monetary policy statements, dot plot, all that stuff, what it means. And the reason why we're also still waiting is because you can see how there's a lot of volatility in the market. And Warsh has basically said that in the last couple of minutes that they're also watching the data points. They also want the markets to watch the data points, the same exact data points, and start pricing that in. And looking at, let's go over to the 4-hour time frame. We had our consolidation areas already mapped out here, drop down to the 1-hour time frame. We're sitting within that consolidation. In the last hour, we had a massive drop that happened right when interest rates came out. After that, the following half hour pretty much made a massive top wick right into the area, came back down and closed bearish. I am still on that bearish case when it comes to US30 and when it comes to NASDAQ. So I'm still expecting that price is going to create that top wick, continue pushing down. Now the only thing, the reason why we haven't taken a trade here just yet is given that volatility. So you can see that, as soon as you would have taken any sort of sells or buys post confirmations outside of consolidation, you would have just had a very short move here. So what I'm expecting to see here, now using higher time frames, 15-minute, 30-minute time frames, and higher time frames like the 1-hour, 4-hour, is a continuation right back down. So we have about 30 more minutes where you would have that high volume. The market's pretty much now going to start pricing in whatever is happening at the press conference and continue dropping. I want this 30-minute and the 1-hour candle to create a top wick. So push up a little bit more into this zone and then flip back down bearish and continue pushing. The last candle closures, they're already giving me the confirmation that we're going to continue with the seller's pressure. So nothing has really changed there as much. Right now we have a risk off confirmed market sentiment just from these setups here. So what we're going to do as we're talking is also set an alert just so we don't end up missing out the move. Now here, same exact thing. We've had our consolidation zones mapped out, 4-hour resistance, support. Price is kind of just hanging around there. Consolidation is the area where the market is going to collect orders. So that's why we're still waiting. That's why we're not trading within that consolidation. Even the hourly candle made a nice top wick, and then it came back down, rejected closer into 29,800, and then closed back into the zone here. You drop down to a 30-minute, and this is where the interest rates came out. The next candle gave you the same volatility that we saw in US30. Like I had mentioned in the beginning of the session, that NASDAQ 100 is going to be a lot more volatile and a lot more sensitive compared to US30. So hence you're seeing a lot more wick rejections here versus the candle closures that we're seeing on US30. Now here with the new hourly candle formation, what I want to see is another push back up into this core consolidation right here, and then a push back down and continue with that sell-off opportunity. So just wait a little bit more here. For any buys, you're still going to wait for price to continue breaking above. But when it comes to a longer term trade, I'm still very much risk off when it comes to US30 and NASDAQ. Then coming over to gold, the bearish setup once again confirmed for this as well. When you're looking at the higher time frames, we had our 4,300 mapped out, which was our weekly low where the candle had opened up. So now we're moving into that area where we're starting to fill in that gap, even on the daily time frame. Same exact thing, trying to fill in that gap here. So what you're going to do, if you want, actually just adjust a zone down here. If price continues pushing below that, we're going to be breaking our own 4-hour low. It has filled in the gap just a little bit here to the left. We have a little bit more to go. And then the hourly candle also needs to continue breaking its own low and continue pushing down. It only started forming about 4 minutes ago. So give it some room to create some top wicks. But the key thing here was that the previous 30-minute candle came all the way back into this consolidation and then flip right back down and close bearish. So this one, same thing, you're creating a top wick, let it break the previous lows. As that happens, you're looking for those sells to come back down. Drop down to the 15-minute time frame, you want that continued confirmation. Candles just closing below 4,300, you're solid, you're all good for those sells. Just make sure that you're not getting stuck in consolidation. That's why we were watching 5-minute time frame. Our entry is not necessarily off the 5-minute time frame. Our entry is based off a 15-minute, 30-minute, 1-hour, 4-hour confluence. But the 5 minutes is going to tell me the volume. If I get strong 5-minute candle body closures, that tells me that I have enough volume to continue pushing and actually start looking for a trade. So then I'm not getting stuck in any sort of consolidation or low volatility. Now looking at silver, same exact thing as gold. Let me just remove the alert here and we're going to create a zone here instead, where price continues pushing back down bearish and you have your sells. For the most part, we have filled in half of the gap here already. So on the 30-minute time frame, it's already creating a top wick, trying to break the previous lows. If you're trading silver, you're pretty much solid. Continue just looking for those candle closures below 69.3 or even 69 flat, and you're solid. You have a 5-minute candle closure here, top wick, flip back down. You've got your silver trades right now. Oil, stay out of it. We still have consolidation, so not much is going on there. Any questions? All good? Give the equities a little bit more time, especially with US30, like it just closed like a doji. So give it a little bit more time to continue pushing. Go ahead.
No, I was just saying this is actually solid. Thank you. I was actually watching the silver trade the whole time. It's a nice setup. Thank you.
Yeah, perfect. All right, so that's it for today's session. We just went over exactly what you should be looking for. If you have any questions, please just message me on Discord. But we will have a market update session today at 5 p.m. PST. So we're going to go over everything that just happened in the market. And we will also have a webinar this weekend on these type of setups and the different game plan that we have under Warsh now compared to what we had with PAL. All right.